Hello and welcome to my third educational video, and this video is gonna be like short, but it will be like really informative. So in this video we will learn about stock options and how you can do monthly option selling on stock options. And as you know, most of us retail option sellers, at least, we sell options on indexes like Nifty 50, Sensex, Bank Nifty, Fin Nifty, and all, okay? But most of us really don't sell options on stocks, mostly because, first of all, in stocks there is the margin requirement which is really high and it's not uniform. So for one stock you could pay up to 4 lakhs, for another you could pay only 75,000. So that's the thing. Margin requirement is one thing, but if we can reduce that margin requirement to under 1 lakh or 1.5 lakhs for if we are like using hedges. So I will also explain that as in this video. And most of us and option sellers, we go to office or we do like work during the day, so we can't stay at the chart and watch the market the entire day. So we can do this monthly option selling, which gives us like passive income over the 10-20 days of the option strike. So we earn without even looking at the market. So yeah, that's how, basically, in a concise way, how we can earn money. You can make about 11 to, I guess, 15%. I won't guarantee any return because it's the market. So I'd rather speak the truth rather than telling you guys about some fake promises. So now, how to first of all select an stock for an option selling, like monthly option selling? How do we select a stock? So for that, first we need to look at the entire list. As we know, like, not every stock has FNO. Only about 200 to 250 stocks in the Indian stock market have FNO enabled. So I have this list. I will link this website in the description. In this list, you can see about every stock that is listed up. That is 224 stocks which have FNO. So first of all, we will click on volume, and we will sort by the highest volume. So now we will ignore any stock that is like under, let's say, 300. Why 300? Because if we like go under that, there will be like liquidity issues. And now I'm not saying that every stock above 300 has like insane liquidity. It's not like that. I will also show you an example of a stock which is priced at 400, but the options are really illiquid. So do not trade in those stocks. I will list you the stocks. It's mostly like, I guess, Nifty 50 to Nifty Next 50. These stocks are good. So in this list, we can see like Vodafone Idea, Yes Bank. We can ignore these stocks, Canara Bank, all these stocks which are like under 300. We will focus on some random stock like Vedanta. Vedanta is good. Vedanta is currently 463. So let's go and check Vedanta out. So yeah, Vedanta is currently trading at 464, and let's go to the daily time frame. And this is a good stock, I think. At the first glance, I can say this is a good stock for non-direction option selling. And now the second step that comes in after you pick your stock randomly, or whatever stock you want to trade, the second step comes is to check the liquidity. So we will go to the at the money. Sorry, this is Nifty. If we go to the at the money of Vedanta FNO option chain, so currently the at the money strike is 460. So if we go to 460, we can see there is, I guess, plenty liquidity on the options. If I go to 15 minutes, we can say it's good. It's like liquid. It's trading well. In the 1 minute, it's not, well, but that is stock options. You won't find bank Nifty or Nifty level volume on the stocks. So you just have to have enough liquidity that you can enter and exit at any time. So this is like the type of liquidity you want, minimum, like minimum to minimum. You want this much liquidity on the options. And also check like the put side as well. If you check like put sides, check the call side. If you check the call, check the put side. That is because sometimes what happens, if the stock has moved up like 10%, the only the call side would have liquidity, but the put side will not have liquidity. So it's better to see if like the both of the sides, like both strikes have like liquidity. So here you can see even the put has liquidity and the call has liquidity. So this is a good stock that you can, pick for option selling. Now let's take an example of a stock that is not good for option selling. So I have this stock in mind, IFL. So this stock is about 470, so it passes that 300 criteria that it should be minimum 300. But if we go to the option chain and we go to the at the money, we can see it has like zero volume, or I guess not fully zero, but it's so low that you will spend more on the slippage than you will earn from the premium decay. So it's better if you avoid stocks like this. There is like, and this is another example. So if the chart, looks like this, just ignore, like don't even think about a stock like this. So now that I have showed you example of stocks that you should trade and you should not trade, now let's move to the second criteria about entry and exit. So now I will take an example of a stock which I have in mind, which is BSE. And if I go to the 1 day time frame, I have marked these two ranges for you. On the upside 3000 and on the downside 2500. So, and now if I check the IV of BSE, it's 38.7, which is I guess good enough that it's a bit overpriced, or I guess average to overpriced. So it's good for an option selling. So if I make a strategy on BSE, for example, let me just show you first. So what ranges did I mark again? I marked 300 and 2500. So 300 on the upside and 2500 on the downside. Now, first of all, look at the margin requirement. It's 5 lakhs. It's insane. And the percentage is, I guess, it is good. I mean, it is good, but it's not worth it if you are spending 5 lakhs. So now what we will do is we will just add hedges. And now, first of all, let me just clarify. The hedges I'm gonna add are not hedges to protect you. These are hedges just for the margin benefit. So now I will just go maybe a few more strikes up, like 7, 8 strikes up, and add the maximum farthest hedges I can. Now look, suddenly I just changed my margin requirement from 5 lakhs to 2 lakhs. And now in 2 lakhs, the percentage has also gone up. Now you are making 12%, whereas before you were making only 6%. And again, if you have like 5 lakhs, you can just make this two lots and suddenly you can make 56,000, which is 12% of 4 lakhs 70,000 with, you know, minimum effort, I guess. And now that I have showed you like a real example of basically every stock I you can trade. Now, let me just explain you the entry criteria. So, entry criteria is just that if you're doing like non-directional, just enter whenever you feel like the market is going to go range bound. Like, for example, Vedanta over here. Vedanta is at a resistance. If it breaks out, then it will break out to like more than 520 and it will attempt to, reach an all-time high. But if you think that the market is gonna be range bound, just enter anytime you want. But if you are doing like directional option selling, like you feel like the Vedanta will break out from here, then you have to wait. You have to use your own technical analysis. If, for example, you have made this a resistance zone, so you have to wait for the market to, close above this line, for example, by the way, and then enter. So that's directional. For directional, you would have to use your own technical analysis. I can't teach you that because that's a, completely separate topic, and I'm not the best at technical analysis because I don't even follow it. And so yeah, that's the entry criteria. Now for the exit, let's come back to the BSE. Suddenly, if you think the stock has broken out of the 3000 range, if you think the market is going to break out of this 3000 and not come back, just exit. Don't even think much, just exit and find a new stock. And another good thing about, monthly option selling is that the main good thing is that option lose their like 50% of the value. This is from my personal experience. They lose 50% of the value in about the first 10 to 15 days. So for example, if you're entering at the start of the month, you will not have to hold till the expiry. You just have to hold till like 15 days, and you will make like 50% of the premium. And oh, another thing. I want to tell you that this is really important. Stock options follow like physical settlement. It's not cash settled. So just if your broker does not square off your positions for you on the day of the expiry, make sure to exit your positions, or you would have to like give delivery, or take delivery of like the amount of shares like in the cash segment. So if the lot size is 550, you would have to buy 550 shares at the strike price if your option expires in the money, that is. So just make sure to do that if you are doing like directional. So that is really important. The thing I just said, that is really important. On the day of the expiry, if you are like short sold options, just exit before the market closes, or you would have to, buy those shares, or give those shares. So that would be really bad. You would have to have a margin of many lakhs, 5-10 lakhs, even more, who knows. So no, that was basically all for monthly option sellings. This was, I tried to make this video short but concise. I didn't teach many advanced topics about this. There is like, or stock options is like completely different from index options. You have like so much data that you need to look at, but I made this video so a beginner can watch it and understand how stock options work, and how you can make a non-directional and a directional, what all factors, like main factors, you need to look at. So let me just do a summary of like this video. So the first thing is selection criteria. For selection criteria, minimum 400 price of a stock. And after that, if you pass that, the next criteria is you need to have liquidity on the at the money. At the money should be liquid. You should be able to get in and out of the trade with minimum slippage. So once these two criteria pass, then your stock is selected. Now you do the technical analysis. So if you're doing directional, you do your technical analysis. And if you're non-directional, just mark the support and resistance zones. So do that, mark your zones and make the ranges, then select your strikes. So select your strikes, and after that it's nothing, just wait. And wait for the premium to decay, maybe 10 days, 15 days, however long it takes. And another thing, that bonus that I gave you, is look at the IV. If the IV is low, ignore. If the IV is high, like high, then you have to enter, because IV high means that the prices of the options are overpriced, but it also means there is a little bit more risk, like there is more risk. And another thing, another important thing, please do not, you know, sell monthly options on stocks which have their earnings. So, the July has their quarterly earnings, right? So I recommend to not sell options like monthly option contracts in July, because stocks will be volatile, like really volatile. Some stocks can gap down 10%, some can gap up 10%, and it will just be a really big mess. I don't want to, recommend that. Imagine if you are like in this trade, like BSC trade, and the stock just gaps up like 10%, you just instantly lost 10% of your capital instantly, like on the market opening. So that was basically all. And if you guys want like a advanced video of this, like this same video but even more advanced, like basically everything explained to an intermediate to an advanced level, let me know. Because this video, I didn't make this video with a script. I just told you guys what I knew about stock options. So that's basically all, and I'll see you guys in another video. Goodbye.